Welcome back to the Stocks Update. If you're interested in the EV sector, especially when it comes to Lucid Motors, you've come to the right place. In today's deep dive video, we're going to cover several important topics related to Lucid, everything from recent price movements, market sentiment, interest rate impacts, and April's U.S. sales numbers to how all these factors are shaping investor expectations. To start things off, let's address Lucid's latest stock movement. Despite strong momentum across broader equity markets, Lucid's share price ended the trading day flat. That in itself is quite underwhelming given the general bullish environment, where we saw a full-on FOMO rally across several major sectors. But Lucid, it bucked the trend. Right from the opening bell, Lucid stock began to tumble. This wasn't the kind of choppy sideways action you sometimes see. It was a clear and immediate drop, signaling that something might be going on under the surface that retail investors aren't yet fully aware of. While many other EV stocks and tech giants surged on upbeat economic data, Lucid struggled to gain traction. This divergence immediately raised some eyebrows. Was it sector-specific weakness? Was it related to interest rate expectations? Or perhaps a company-specific issue? To understand the broader context, let's touch on the key economic data that came out recently. The non-farm payroll numbers came in stronger than expected, with 177,000 jobs added versus the forecast of 142,000. Meanwhile, the unemployment rate matched expectations, so from a macroeconomic perspective, this data was seen as healthy, fueling optimism in most parts of the market. But here's the flip side. Strong economic data can reduce the likelihood of interest rate cuts. That's exactly what happened. Just a day ago, the probability of a 25 basis point rate cut at the June 18 FOMC meeting was sitting around 55%. After the jobs report, that likelihood fell sharply to just 35%. This is critical for EV stocks like Lucid, because the automotive industry, particularly electric vehicle manufacturers, is highly sensitive to interest rates. Higher borrowing costs can discourage both consumer spending and corporate investments, so the market's reassessment of interest rate cut expectations may have disproportionately impacted Lucid and its peers. Now, let's pivot to something more concrete: Lucid's April sales performance. These figures are estimates based solely on used data, but they give us a decent snapshot of how things are trending. According to reports, Lucid sold 815 sedans and 5 SUVs during the month. These SUVs are likely early builds of the Lucid Gravity, which hasn't yet reached full-scale delivery. If we take these numbers at face value, it suggests that Lucid is not quite ramping production or deliveries at a pace needed to hit its full-year targets. Let's do the math. To meet the stated goal of 20,000 vehicle deliveries in 2025, Lucid needs to average about 1,667 vehicles per month. With April's total sitting at 820, the company is currently operating at about 50% of the required monthly run rate. That's a significant gap. However, there is a silver lining. In the last earnings call, management mentioned that they were transferring more vehicle bodies to their MP2 facility, hinting at increased production capacity. It remains unclear whether those bodies are for the Air sedan or the Gravity SUV. But either way, the company appears to be preparing for a higher output in the coming quarters. Another development worth noting involves global trade relations, particularly between the United States and China. For the first time in a while, both countries seem to agree that diplomatic talks are happening behind the scenes. Up to this point, we mostly heard from U.S. officials expressing optimism, while Chinese representatives seemed unaware or dismissive of those discussions. But this new mutual acknowledgement of talks could represent a turning point. Former President Trump has hinted at an impending deal with China, and some believe this may be fast-tracked due to India's recent ambitions. India has openly stated its goal to become the new global manufacturing hub, aiming to attract large companies that have traditionally depended on Chinese factories. Apple's most recent earnings report added more fuel to this narrative. It revealed that 97% of all iPhones manufactured last quarter were produced in India, a dramatic shift that could be putting pressure on China. If China feels the heat from India's rise, it may expedite trade negotiations with the U.S., which could result in broader market optimism, especially for high-tech sectors like EVs. Interestingly, Lucid hasn't issued any new SEC filings or major corporate updates recently. No new guidance, no press releases, no investor presentations. It's been a quiet few weeks, but that might not last long. Earnings season is just around the corner, and with that comes the potential for a wave of analyst upgrades or downgrades. Depending on how Lucid performs relative to expectations, we could see significant moves in either direction. Until then, the stock seems to be drifting along with the broader market's mood, albeit with less enthusiasm. Let's talk about the short interest, because this is an important part of understanding how traders are positioning themselves. As of the most recent data, approximately 2.81 million shares were returned by short sellers, indicating a small but notable retreat from bearish bets. Still, a staggering 28.77% of Lucid's free float remains sold short. That amounts to roughly 354 million shares. The average cost to borrow sits at 2.29%, which is relatively low, suggesting that short sellers aren't being squeezed just yet. But the fact that some shorts are covering their positions could mean they're trying to reduce exposure ahead of Lucid's earnings announcement. Now, in terms of daily trading volume, Friday was on the lighter side. Lucid saw about 64.3 million shares change hands, compared to its average daily volume of around 100 million. This suggests that most of the activity may have been driven by algorithms, not retail or institutional investors. Even a look at the dark pool data shows very few large trades, maybe 20 or 30 significant transactions, none exceeding $1 million in value. This lack of high-volume buying tells us that big money is still on the sidelines when it comes to Lucid. Despite closing above a key strike price of $2.50, options activity painted a cautious picture. Lucid ended the day at $2.53 per share. On the options chain, roughly 980K call contracts were traded compared to just 185K puts. However, 52% of all contracts had a bearish tilt, indicating ongoing skepticism in the market. The $2.50 strike is an important technical level, and the fact that Lucid closed just above it means that nearly 15K call contracts are now in the money. This translates into about 1.5 million shares that market makers may have to hedge by purchasing underlying stock, a move that could lead to short-term upward pressure on the share price early next week. From a technical analysis standpoint, there are a couple of key levels to monitor. Lucid stock remains wedged between the 50-day and 150-day moving averages. The 50-day sits around $2.36, while the 150-day is slightly higher. The recent close above the 50-day EM is encouraging but far from decisive. A breakout in either direction could be catalyzed by the upcoming earnings release. Until then, Lucid may remain range-bound, with traders watching support and resistance levels closely. Speaking of earnings, let's briefly discuss market expectations. Based on options pricing, the market is bracing for about a 10% move in either direction post-earnings. That equates to a potential 25% swing when factoring in pre- and post-market volatility. Historically, Lucid's earnings have been a mixed bag. Out of its last 11 or 12 reports, only 2 were met with positive stock reactions. Even in the best-case scenarios, the share price climbed just 3.12%. So if history repeats itself, any rally might be modest, unless the company truly surprises to the upside. To wrap things up, Lucid's April performance and current trading behavior leave investors with more questions than answers. On the one hand, the company has a lot of potential, especially with the Gravity SUV set to scale up. On the other, its current delivery pace and lack of major institutional buying raise concerns. Do you think Lucid's April sales were a positive step forward or a sign of trouble? Are you buying the dip, holding, or selling ahead of earnings? Do you believe Lucid can hit its 20K vehicle target for 2025? Let us know your thoughts in the comments. If you found this video helpful, please please give it a thumbs up and consider subscribing to the channel. Your support helps us continue to bring you in-depth market analysis. Thanks for watching, and I'll see you in the next video. Take care.